Hello and welcome to today's Washington Policy and COVID-19 update. This update comes to you from the National Tooling and Machining Association and the Precision Metal Forming Association, and it's presented by your DC Advocacy team at the Franklin Partnership and the Policy Resolution Group at Bracewell. I'm Caitlin Sickles, and on today's webinar is also my colleague Paul Nathanson from Bracewell, as well as the guys from the Franklin Partnership, Omar Nashashibi and John Guzik. Most folks who are on today's webinar know who we are, but the Bracewell team does your media work, supporting the efforts of the Franklin team, who are on the ground lobbyists and advocates for small and medium-sized manufacturers here in Washington, D.C. Today's webinar, as with all previous 25 of these policy and COVID updates, can be found on our website. That's onevoiceinfo.org. Also on that website, you can find a number of the resources we will reference in today's report and have been referenced in previous reports. That website, for folks who haven't visited it lately, is now fully up to date. We have removed any outdated content, subbed in all current content. So if you haven't checked recently, do visit the site and you'll see all updated resources there. You can also find on the website a link to our Talking with One Voice podcast. You can find that podcast wherever you download podcasts. If you're not yet listening, we hope that you will. We put out episodes every other week, and you can rate us, review us, subscribe so that you always have the latest episode in your queue. You can also find us in a weekly video series called 2 Minutes with One Voice, where we cover policy issues. Those videos come out every week from NTMA and PMA. You can find them on your association's YouTube channel, and they're also sent by email. You can also find them on social media. With that, I am going to turn it over to the team from Franklin Partnership. You can see on our agenda there is lots to cover. It looks like we're going to start with new guidance out from CDC on what fully vaccinated, that's right, fully vaccinated people can do now this 1 year post the start of the pandemic. So over to you guys.
Thanks, Caitlin. We're going to start with workforce safety and compliance. As Caitlin said, now that people are getting the shots in the arm, it's time for CDC to come up with some recommendations and some guidances and guidelines moving forward. And so I guess the first thing the CDC says is, when are you fully vaccinated? And the CDC recommendations is it's 2 weeks after your last shot. And so if in the case of Pfizer, where you need 2 shots, you are fully vaccinated 2 weeks after that second shot. If it's Johnson & Johnson, it'll be 2 weeks after the only shot that you have moving forward. So I think that's an important distinction. It's just because you get the vaccination doesn't mean you're immediately immune from getting the disease. And then if you are fully vaccinated, what are the rules? Can you meet with other people who are unvaccinated without wearing a mask? And so they came up with some recommendations that, and this is important, some of the words that we're going to be using is you can meet in a room without a mask with other unvaccinated people from the same household. And so if it's your house and your neighbor's house, you two can meet together, but they don't want parties forming in your house just because you and everybody else is unvaccinated. They also made some recommendations that, stay away from those who are sick and who are vulnerable, and that if you do come across somebody with COVID, should you get a test? And they say it's not necessarily to get a test just because you're fully vaccinated, but please keep track of your symptoms. If symptoms persist, then you should go back in and get a test. So then the CDC says, well, what hasn't changed? Well, if you are fully vaccinated, do I still have to wear a mask when I'm meeting with unvaccinated people? And the answer is yes. Let's continue to wear a mask, demonstrate social distancing if you're meeting with people who are unvaccinated moving forward, and that makes sense. Stay away from the vulnerable people, delay your potential travel, and follow additional CDC guidelines moving forward. OSHA also issued some guidelines, and these are some quick links that you might want to print out and give to your HR person on what what is an unvaccinated person or what is a vaccinated person. What can you do? What are the quarantine rules? And there are other scenarios out there that OSHA put out some specific guidelines to help manufacturers manage now a new stage in the pandemic. We're dealing with the vaccinated and the unvaccinated. But OSHA.
Yeah, sorry, John. Yeah, this is a really good one for you. I'll give it right back to you on OSHA here, John, in a second. Is this vaccination guidance, as you noticed with the slides, the previous three that John went through, were recommendations largely to households, but can clearly be applied to businesses as well. But on this page from the CDC that John just went through, all of these are live links that you go to John's point. We definitely encourage your HR or someone else in your shop, click on the link down below. It'll take you to that CDC website where this table of contents will hyperlink you to also posters that can be printed out in terms of proper settings, as John just alluded to a moment ago, in terms of those vaccinated, unvaccinated. To spare you, we didn't put those all here. But this so far has been the best website resource that we've found for post-vaccination yet. Yes, we were all waiting for this guidance from the CDC since February, but this page in particular is quite lengthy, and we think this one is certainly worthwhile you all spending a few minutes. But John, I think you were heading with, we're still waiting on OSHA and their ETS.
Yes, and we are expecting, and we were half expecting we were going to have that be part of our presentation today. But the emergency standards, the COVID standards moving forward, we expect, and the new Secretary of Labor was just confirmed last week, and we know he is using his first week in office is putting the final touches on emergency temporary standards for COVID. And these are new standards, enhanced standards that OSHA is going to have all employers implement moving forward while we're in this pandemic moving forward. We definitely believe we will have these standards at our next webinar, and we may do a specific webinar perhaps with somebody from OSHA to talk about what these emergency temporary standards mean for manufacturers.
Yeah, and what John is referring to there is back in, I think it was January 25th, there was an executive order issued by President Biden that said there are 16 points that he would like to see OSHA address in an emergency temporary standard. We do, and you've seen in our previous presentations, we do have some guidance, but not an emergency temporary standard. Right now it's voluntary. To John's point, the ETS, as to which it's referred, is going to be binding and not just recommendations. Biden set out in his executive order that the OSHA should come back to him by March 15th, whether or not an ETS is needed, and if so, what it would look like. We are hearing that, honestly, we're expecting at 4 o'clock this afternoon. So, and this is Friday right now at 12:10. So to John's point, we are certainly still expecting it sometime over the weekend or Monday. So you all need to be very, very aware. If you're not in, say, California, Virginia, or Michigan, you are going to be expecting some very significant changes, as those states are likely going to be the model for the federal one standard that's there. And this is a real issue. I think the reason we put that Wall Street Journal feature, it was 4,000 word story in there, is a reminder that this issue is front and center for the Biden administration. Just take a look, and this is not a member of One Voice, but we did want to put this out there that OSHA has cited a Missouri auto parts manufacturer for failing to implement and enforce COVID protections that led to exposures and press operators' death. Now, in this situation, they had done repeatedly and did not adhere to either state or federal guidelines. And so what we're increasingly seeing, especially whether it's liability protection legislation in California or elsewhere, that employers need to comply with their state, local, and now coming Monday, federal guidelines. And that's why it's so important. As you can see, obviously no dollar amount is going to make up for the death, but these are preventable in some ways possibly. So we strongly encourage you to watch out for the guidance. And there was a question that came up earlier that they weren't able to see the CDC link to be able to go see all those. This presentation will be emailed out within the next couple of hours, so hopefully you'll be able to more accurately see that link and click on it and maneuver. In addition, it'll be posted on the website, Caitlin reference onevoiceinfo.org as well for you to take a look at. A quick couple of things. John, do you want to mention the deferral of payroll taxes? We know that was a big priority for the previous administration.
Yeah, and we also don't think many of our members from those we've talked to took advantage of the payroll deferral, but it's now time to repay those the payroll deferrals basically impacts those who make under $4,000 a week. The repayment program started in January. It runs through the rest of the year. Basically, $4,000 for anybody making $4,000 over a 2-week period. So repayments must be done as a separate check, so it should not be included as part of your quarterly payments or other payments to the IRS. It's a separate payment that should be submitted to the IRS for repayment. Omar, there's also been a couple additional information regarding the earned income tax credit. There's a 2020 earned ERTC, and there's rules for the 2021 ERTC.
Oh, and that's just not enough to make you confused, John. There's also now new changes with the law that President Biden just signed yesterday that you're going to cover in a minute that also affects some of the dates and the deadlines with we'll refer to it the ERTC or the ERC, Employee Retention Tax Credit, that we lobbied so hard to get expanded to now cover those that did receive a PPP loan that was forgiven are now eligible. So that was an important victory for us. Again, we're not CPAs, but we definitely encourage you to talk to your accountants, and the interplay between the PPP and with the Employee Retention Tax Credit. As we mentioned, we do not have IRS guidance on ERTC for 2021. For the calendar year of 2021, we do not have an official guidance from them. We just wanted to restate for you all here, though, because the next slide discusses 2020. What are some of the clarifications here? The new law looks at, in terms of who is eligible, that's really most important. And for the calendar year of 2020, we did not go retroactive. For calendar year 2020, the test for your gross receipts loss is still 50% compared to the same quarter in 2019. When you all come around to claiming the Employee Retention Tax Credit for the calendar year 2021, say for this first quarter, your gross receipts loss test is down to 20%, comparable to the same quarter in 2019. So basically Q1 2021, Q1 2019, 20% gross receipts drop. Then you may claim it at 70% of qualified wages, basically $7,000 per quarter per employee, or $14,000 for the first 2 quarters. So definitely check with your CPAs on that one. Quickly here, this is now for the 2020 Employee Retention Tax Credit. On March 1st, we did receive a guidance. This is an official, we call a notice 2021-20. Encourage you, again, reach out to your qualified CPA on this one. Especially most of you, I don't think this should apply because you were essential workers, essential businesses, and therefore you did not volunteer, or many of you, we do know some, that you did not have to shut down your shops. This clarifies, though, if you did voluntarily reduce your hours, that you are not eligible for the Employee Retention Tax Credit. Lastly, that will apply to all of you that do claim this record retention. Everything that we're seeing, whether it's PPP or other taxes, say 4 to 6 years seems to be about the retention for what you want to do for your record. So please keep that in mind as you squirrel it away somewhere online, Dropbox, physical, what you like. But John, I just mentioned PPP loans. Why don't you go ahead and give us a quick update? We've got some progress ahead of that March 31st deadline.
Absolutely. Actually, on Tuesday, I recorded our 2 minutes with one voice, and then made a pitch that if you're interested in a PPP loan or a second draw loan, you must submit your application by March 31st. By the end of this week, the chairwoman of the House Small Business Committee and the top Republican on the committee have come to an agreement on an extension of the PPP program through May 31st. This cannot be done through, congressional edict. It's going to need a bill passed, and we expect when the Congress is back in session next week that they will pass a bill to extend the PPP program through May 31st. We're also working with Senators Collins, Senators Cardin as well, to get similar legislation introduced in the Senate and moving to extend the program through the 31st of May. Having said that, in the meantime, we signed PMA and NTMA onto a U.S. Chamber of Commerce letter, which calls for an extension of the PPP program through the end of the year. So clearly, this is a moving target moving forward. Regardless, it's a huge victory because there's still our members who are interested in the second draw program and haven't had it formalized yet. And so we do know, to ease the stress of some, that you don't have that March 31st deadline. It looks like that deadline will be May 31st.
So John, let's talk a minute here about strategic consulting. So again, not to step too far out of our own lanes here, but a little bit of unsolicited advice. A couple of things with regards to timing. We do know from our surveys, I believe it was 57% of our members said they were interested in a second draw. Since we're at 90% of our members already took first loan, that's why what John just mentioned about the deadlines being changed, and I'll go back to that even for a second. So now you've got the deadline for the application to be May 31st. You see that. June 30th will be the deadline for SBA to stop considering loans at all. So meaning that if anything is still in the hopper, SBA will have authority through that June 30th right here in order to consider applications. Now going back, what is the issue? I think it was John that talked about the delays that we were seeing over at SBA because of fraud reviews the other day in our previous webinar. That's why we wanted to put this February 10th slide in here, because this explains to many of you why you're seeing so many delays, and then I'll tie them back into our comments on strategic advice. You are seeing some significant delays in processing from SBA now on the front side of loan applications. This we took from the lender. So you as a borrower would not have seen this. We thought of ourselves as a lender, and what would we want to know if we're working on behalf of you? So the SBA is going to be reviewing random samples of loans that the lender has submitted to make sure all the paperwork and everything else is correct. So we want you to make sure that you think about timing. If you are going to submit a second draw application, do not now wait until May 31st. You need to get that in. Your quarter is coming up right now on March 31st. Our strong advice is if you meet the reduction 25% gross receipts reduction threshold to make you eligible for PPP second draw, you should probably work on having your application in early April. Speaking of which, quickly here before we jump over and hand it to John to talk about what happened on Capitol Hill this week, the PPP second draw FAQ is out. The link at the bottom, we'll send it to you. It's fairly lengthy. There's a number of clarifications, the most significant of which, this is the number one question John and I have been getting since second draw passed into law on December end of December. How do I meet the needs test, the necessity test that in good faith that I was required to say this is a disruption to my business? On second draw, it says that if you can demonstrate having that 25% reduction in gross revenues, you will have deemed to have made the required certification concerning the necessity of the loan in good faith. We knew many of you were worried about that certification, whether it was you were over $2 million on PPP1. Second draw, the government has officially said you meet the needs certification if you have that 25% reduction. So watch out for that. I'm going to turn it back over to John on the next one. Keep in mind, if you haven't submitted your second draw, we are reaffirming that what we told you previously is limited to 300 employees or fewer. It is not based on SBA size standards, as you can see here highlighted in red. But John, they're starting to make some progress, but again, we are concerned about some of the slowdown in approvals due to SBA reviews.
Yes, because to Omar's point, roughly 2.5 million loans have been issued in 2021, which is much slower pace, and then there are fewer dollars that have been spent on those loans. And it's partly because of the slow approval process at SBA, but it's also because of the focus that the administration has on providing loans to small minority-owned businesses and those in the truly underserved areas. And so that may explain why the slower rollout, in addition to the SBA slowing down that process moving forward. And then when we look at the loan forgiveness process, 2 weeks ago when we had in our last webinar, I think there were 3.3 million PPP loans that were not submitted for forgiveness. This week, the latest data has 3 million loans that are applications yet to be submitted for approval. So I know some of you, Roy Sweatman to be one of them, and other of our manufacturers have received their loan forgiveness already. But if you've not submitted your loan forgiveness, now would be the time to definitely do that. The big news is what happened this week, and the president signed the American Rescue Plan Act. This legislation moved to the Congress from introduction on May 24th to signed by the president by March 11th. That is meteoric speed for Congress doing something moving forward. As you know, it passed largely along party line votes, but make no mistake about it, this was a huge victory for President Biden and his legislative agenda. What is in this package? We've talked about in the past, extended unemployment benefits. They reduced it a little to $300 a week and extended it through 9/16 through September 6. It also included the first $10,200 of unemployment benefits will be considered tax-free. Provides $2.2 billion for the Department of Labor for fraud investigations. Provides direct payments to individuals and qualified dependents. And because of Senator Joe Manchin's desire to limit who gets those payments, they start phasing out for single filers between $75,000 and $80,000. For joint filers, if you make more than $160,000, you would not receive any other benefit moving forward.
So John, one thing you may want to also hear to highlight for, sorry, I didn't mean to cut you off on the COBRA because that's important too. Something that we did work quite a bit on, and John, can you touch on it a little bit? That $2 billion for the Labor Department to address fraud, a lot of that is for unemployment insurance enforcement. So I think, John, we were hearing a lot of concerns about people. We even had survey results that told us we had a significant number that said, hey, people were turning down jobs you were offering because they thought they could make more on unemployment. And so we think it's important that even on the Democrats, this is literally a Democrat bill, no Republican supported it, they do have this fraud, $2 billion to address fraud and other, again, access to unemployment, but they did recognize that potentially there are some issues there. And on the phase out, so you do start to, you'll have a hard stop on the cash straight to individuals. That hard stop is $80,000 for individuals, $120,000 head of household. I think it's $160,000 for joint filers. So to John's point, and that's, I'll give it back to you, and that's why it's really important what Joe Manchin did. And Jeanne Shaheen, a Democrat from New Hampshire, was really emphasized this, is we do need to motivate people to return to work safely that can do so. John?
Yep, and 100% reimbursement through refundable credit for COBRA premiums for the employer and the employee. So I think that's a big thing moving forward. The extended, we talked a little bit about the ERTC, the Employee Retention Tax Credit, that was extended through December 31st. They increased paid family medical leave credit to $12,000. It was $10,000 under the CARES Act. They did expand how your employees can utilize paid sick leave. They've included taking time off for your employees to get their vaccine, or waiting time for when they get their tests back. They could use paid sick leave for those benefits. Use paid leave benefits for those efforts. So they also expanded till 9/30 the employer paid sick leave and family medical leave, expanded through September 30th. $100 million for OSHA, $100 million for Small Business Administration for basically their Community Navigators program to find additional resources, COVID resources.
Yeah, that's right. If I may pause this right here for a quick second, because we do have two questions that are fairly relevant, and we are actively in real time trying to get you the answer. So let me pause and ask a question here. Will they use 2020 returns if already submitted for the individual joint filers payment determination? Again, we're gonna not be able to fully answer that as we're not tax preparers, but based on what we are looking at right now, if you filed your 2020 returns, then they are gonna start to try to look at that. But for the vast majority that have not filed the 2019 return, they're gonna be looking at 2019 first. And then, so there it looks like, sorry, again, real time. Based on this, they're going to be looking at your most recent, is what it looks like. And from based on the initial, again, the ink just literally dried last night. Again, with the COVID-19 relief bill being passed, should employers encourage employees to delay filing their taxes since the first $10,200 of unemployment income may be exempt? That I will feel more confident in speaking as a non-practitioner. Yes, anything you can do to delay. Again, you've got to do your quarterlies, got to do your estimates. But right now we are coming close. We need to start waiting for some IRS guidance. We right now have the chairman of the House Tax Writing Committee and senior leadership Democrats in the House saying, IRS, delay April 15th like you did last year. So that is the question that many have right now in Washington. Will the IRS delay April 15th again? Doesn't delay your estimates, folks. Delay the filing requirement. We were skeptical that they were going to delay it in large part because they're getting ready to do a lot of tax increases in the transportation bill John and I will talk about next month. but we are watching that closely, whether or not they do delay. So that's something why we need to be able to be more focused. Again, quick couple of things before we turn it over to Paul and Caitlin. A few other questions that we also received, again, to the extent that we can, is the if the family FFCRA just extended, or has it been funded again? Meaning, if someone has already taken 10 days, are they eligible again? So let me break that down. In the FFCRA, there are two areas. There is the paid sick leave for the individual, and there's the medical leave for both. So what they ended up doing was split it. The 80 hours do not start over. The 80 hours have not started over and are not extended through September 30th, but the employer credit for the leave is extended through September 30th. So the 80 hours itself is not. However, we have seen on the 10 days for the paid sick leave, to the primary question, that does start again. Our recollection is on April 1st of 2021 is the effective date for the 10 days. The 80 hours does not restart. That was the optional language. Don't believe this bill wiped out the optional language, but we do know it did not mandate nor restart the 80-hour clock. Hopefully that answers that one. Sorry, John, one more. And this will do somewhat from memory, and we'll follow up with the questioner on this COBRA question. Please explain how the COBRA tax credit works. Does the employer pay the COBRA bill, then later claim a tax credit? So it's first started off as an 85%, John, or maybe it was an 80% subsidy, and then they ended up in the Senate was the one that took it to 100% subsidy. So don't want to speak incorrectly. We'll follow up with the questioner on this. Our understanding is yes, you would go back in as the employer to go back and claim the credit.
It's a refundable tax credit, yes.
Right, it's refundable. So yeah, you would have to go back and take care of that, but it is 100% and not the 80 or 85 that the House, 80% I think, John, that the House had that went in there. So I think these are all the tax related questions. Again, please discuss with your CPA and your tax practitioner. Two political science lobbyists just did our best right there. Paul, speaking of political science lobbyists, let's turn it over to you. Let's talk about what's going on with some of our steel issues and what you all are doing.
Thanks, Omar. As we have been reporting, we hear you regarding the issues with steel supply, extended lead times, and steel prices. What you see before you is the latest steel benchmark report that was just published yesterday. And that blue line is US prices compared to prices in Europe, China, world export prices. You know, as we have been explaining, we understand that it's not so much the price that you pay for steel, but it's the price that you're paying compared to your competitors, particularly your overseas competitors. So we continue to advocate, particularly for the termination of the Section 232 tariffs. The U.S. Trade Representative nominee, Catherine Tai, she will get a vote next week in the Senate. Late next week, it looks like they've scheduled a vote, so President Biden should have his, at least the senior members of his trade team in place by the end of next week. One piece of interesting news, there really hasn't been a lot of action on 232 tariffs or a lot of statements besides the Commerce Secretary, Secretary Raimondo, on an offhand comment in an interview with MSNBC, stating that no decision has been made, but that the 232 tariffs, the data shows that they've been effective. There is a letter going to her from the Coalition of American Metal Manufacturers and Users with about 12 links to studies that show that they have not been effective and that they have been damaging. Besides that, the administration said that they are reviewing all trade policies. There was an announcement since our last webinar that the Biden administration in the U.S. has reached an agreement with the EU to postpone the tariffs, the trade war regarding Boeing versus Airbus subsidies. As you may recall, we were successful in getting copper alloys off the list, but that has been an ongoing trade dispute. So that does indicate that there may be some progress with the EU. The EU has been the most vocal regarding the Section 232 tariffs, demanding that they be taken off. So we will keep you posted on those issues. So just a couple slides to show some One Voice members in the news. We often talk about One Voice members being in the news regarding steel tariffs, but we are very pleased when we have members in the news for other things as well, and that's a reminder that your One Voice team can help on these issues, particularly for our public affairs agenda. Everything from workforce issues, workforce training, and when you have some positive news, please share it with us. These are a couple NTMA members who have been in the news recently. And then on the next slide, back to having folks in the news regarding the steel prices and steel tariffs. We definitely need need your voice to continue to talk about steel supply and steel price issues so that we get the administration's attention. We did, as Omar and John mentioned earlier, we did do a statement regarding the bill that has been introduced to extend the PPP loan deadline. So we are working closely with Omar and John on that as well.
Thanks, Paul. John, turn it over to you. These things aren't possible, obviously, without the support of you all towards your associations.
First, we want to thank those who have dug deep and made a contribution to NTMA's GAF fund or PMA's Advocacy fund. It has gone a long way in making sure that we can continue the high level of service that we do for each of you in the PMA and NTMA membership in general. So if those of you who haven't, and we're in a new calendar year, that if you would consider making a generous contribution to each of these funds, links are here, and it will go, as I said, it'll go a long way in making sure that these forums and platforms can continue moving forward throughout this year. We are planning our next webinars. So the Congress they're in next week, then they have a break for the Easter recess, so they won't be back until sometime in mid-April. But we are continuing to monitor the actions that's taking place at the administrative level and at the agencies, the different CDC and OSHA guidelines moving forward. We mentioned we are looking forward to the OSHA's emergency temporary standard on COVID, and so we will be having another webinar either sometime April 9th or maybe April 15th or 16th. So stay tuned. Anybody have any questions?
Yep, please. With that, any questions, please feel free to type them into the box on your right. You see our contact information there. You can always reach out to Bill Padnos at NTMA or Christy Carmigiano at PMA for additional information. And as John mentioned, our big thing is sometime between now and close of business Monday, in our 20, 30, 40 plus years experience in this town, we're going to get it in a few hours, the OSHA ETS that you all are going to have to start dealing with. And at that point, we will give you some specific news on it as well.
Bad news always comes out on a Friday night dump.
Yeah, exactly. We had one request if we could share again the slide regarding the suppliers that was up there. We'll put that quotation up here for a moment for you to take a look. But again, this will be sent out in the next couple of hours by both NTMA and PMA to all registrants. That will have also a link to the live version, so you get to hear us again, also with the PDF of the slide deck, and we'll go ahead and post it online as well. We really, really do appreciate you all sticking with us. Unfortunately, we do have to say this is 1 year to go through that we've been doing these. Literally, as Caitlin mentioned, 26 of them now in the 12 months since we literally started them last week of March. We did have one last question come in. It's not directly related to COVID, but these are Washington updates. We're happy to address it. John, let me lay the groundwork and I'll hand it over to you. The PRO Act. The PRO Act did pass the U.S. House of Representatives earlier in this week. It is a national union-oriented bill, not to be confused with one that supports local unions with whom many of you already have relations. John, I'll let you talk about what the national PRO Act does, but just know this, it did pass the House and it will not pass the Senate.
Yes. PRO means protect our right to organize. As Omar said, this is the dream legislation for the national labor unions moving forward. With a nod to supporting the national labor unions, the House and Speaker Pelosi moved this bill this past week. It passed on a very partisan vote. Most Democrats voted for it. Most Republicans voted against it. And what we call this bill, Omar and I call this bill messaging bills. These are bills like the PRO Act, like the background check on guns, and there's going to be other bills coming forward in the coming weeks that are meant to mobilize the base of the Democrat Party, and it has no chance of getting anywhere close to getting the 60 votes necessary to pass the United States Senate. So those of you who are concerned about union organizing activities in your facilities, you still need to look at what those local unions are doing. But at the national union level, these programs like the PRO Act we don't foresee them being implemented anytime soon.
Yep. That's right. To that point though, John, do you think that might be added sometime down the line, potentially to a reconciliation bill, such as the transportation infrastructure bill?
I don't. I think there's going to be an effort to try to do it, but there are so many issues mucking up this potential infrastructure transportation bill with regard to pay-fors and everything else that this is just another extraneous proposal that may get put on. And with the 50-50 Senate, while Manchin might be willing to go along with it, will Kirsten Sinema in Arizona be willing to go along with it, which is a much smaller state, doesn't have as many organized labor union folks. So I think there'll be an attempt, but I don't think it makes it on. Do you disagree, Omar?
No, I think I agree with you that there could be some possibilities for that to happen as well. But we had one other question that we will again continue to further clarify. We'll send out a notice on it. The question came back to the optional extension of the FFCRA. We'll get back to you on that one. We don't want to give you a definitive answer whether or not it restarts. And again, I'm not trying to dodge it. From our understanding was no, that it remained optional under the 80s, under the extension of the 80 hours, but we will get back to you with a definitive action whether or not, because our understanding was the optional, and what we're reading in front of us right now says, yes, the optional does continue through March 31st of 2021. Again, the subsidies do go back through September 30th, but we will go back and clarify and get back out to everybody. We want to make sure that, again, the ink is just dry literally as of yesterday afternoon from what Biden signed. So we'll clarify that and make sure everyone is clear on what they answered with regards to the optional or the mandatory, but we believe it's optional and we'll get back to you on that one. Any other questions come through? Otherwise, thank you, everybody. Please, as Caitlin mentioned at the beginning, subscribe to all the other updates. We did a Washington Wire newsletter that came out this Tuesday. We did also, as John mentioned, put out also on Wednesday and Thursday, 2 minutes with One Voice video, and of course, our One Voice podcast that we also do, and we'll have another update on that next week. Thank you, everybody, and we'll talk to you in the next month or so.